So, look, delighted to have as our next speaker Duncan Craib, who is the Managing Director and CEO of Boss Energy, one of Australia's current producing uranium companies who came back into production this year with the Honeymoon deposit in South Australia. That's was a previously producing asset that was refurbished, and Duncan no doubt will give us the update on how well that asset is now performing second time round with a number of quite positive improvements that Duncan and the team have made to the operation. Clearly, Boss also expanding their footprint through their acquisition this year of Alta Mesa, and that is also back in production in the US market. So Duncan, as the MD of the only producer in multi-jurisdictions in the ASX, it's a fabulous place to be at this time of the market. So Duncan, over to you, and look forward to the update.
Thanks very much, Andrew. Thank you. I'll just share screen. Make sure that's... Terrific, thank you. I mean, as you've heard this morning, we're entering a very exciting uranium market, not just demand from existing reactors, but what we're seeing is new forms of demand from data centres, concrete, steel manufacturing for industries, and really those that are pursuing clean 24/7 energy sources. And as such, the demand for nuclear power and uranium is just set to grow. But what's really pleasing to me in these most recent weeks since the WNA symposium in London is just being contacted by SMR engineers testing the uranium market for new U3O8 price discovery. So that's a bit of a first that we're seeing, which is just bodes so well for our industry. But into that market, Boss Energy has really come into its own. So we produced our first drum of yellowcake in April this year. We've now got our 2 shipments ready from our 100% owned Honeymoon uranium mine. And that was a hugely significant milestone for Boss Energy. So after 7 years of sort of testing our lixiviant in the wellfields, proving that the technology worked, that we're now getting the right grades and tenor and operating the wellfields at full capacity. Secondly, we've also tested the ion exchange system, which is also working to nameplate capacity. So as I walk through the presentation, just highlight how we're bringing each column on and the sort of gradual ramp up that we're doing. But proving that ion exchange technology and the lixiviant was a huge game changer for Honeymoon. So we really are now in solid production at a commercial scale. And then a few months later, in June of this year, Alta Mesa commenced production. On Monday, I'm travelling with my chair to South Texas to see the opening ceremony for Alta Mesa, to officially reopen their mine and see their first shipment of U3O8. So that investment into Alta Mesa, Encore's flagship mine in December of last year and January, has been a real standout success, and I'll also explain that. So, I mean, here we are. It's just really exciting to be a producer in this market. In the past few months, Boss Energy has achieved those significant milestones, becoming South Australia's 3rd operating uranium mine. And we see South Australia as the premier jurisdiction in Australia, where it's very friendly disposed towards uranium mining. And it's also then we look at more internationally, and on the ASX, as Andrew just mentioned, we are the first in recent times to have multi-mines in multi-tier 1 jurisdictions to be in production. So very, very exciting period. What I wanted to take through just before we get going is building mines takes time, there's no doubt. I mean, Honeymoon was discovered actually 50 years ago, but it's taken that length of time to get into commercial production. And for me, half a century from the early 70s when uranium was first discovered, and then they used a pilot plant for ISR technology, which is really one of those backyard swimming pools that you can see there in the slide with David Brunt, to then the demonstration plant in the 1980s. And the reasoning for sort of highlighting this is it just takes time to bring these mines into production. Uranium's not, if we look at the last cycle, only 3 or 4 projects came in on production, one of which was Husab, where I worked as the finance director. But these mines do take time. It's challenging finding the right talent of people, finding the right jurisdiction, finding those with good regulatory environments, and really finding those with economic ore bodies that can be mined at competitive cost to produce a profit. So I was really proud to be here today with the 2 projects that are now in operation, and our ramp-up's going extremely well. So those next tranche uranium mines are likely to be situated in more remote, infrastructurally deprived places compared to predecessors. They'll be operating under increasingly stressed human and capital potential, such as water, power, labour, and they'll almost be certainly subject to more stringent regulatory systems. We're seeing that in Australia now with sort of 2 years minimum hydrogeological testing for groundwater just to get passing the EPA type requirements. So the environmental aspect is becoming increasingly more difficult for uranium mines. So the challenge that we see going forward is not all mines that say they can come on time will come on time. And that's why we firmly believe that the price is going to spike in the next 2 to 3 years. We know the structural deficit's been talked about this morning, but really what's really going to give rise to that shoot in the uranium price is just the fact that a lot of new production destined to come online. No doubt they will in time, but I don't think the timelines putting forward are that realistic. So that's where we feel very confident with 2 producing mines in 2 tier 1 jurisdictions ready to operate. So we set about knowing the challenges of the industry and having been in the industry for decades as a board, we recognise that the best way to make the most profit for a uranium mine is to be there with first mover advantage as the uranium market begins to turn. So that's what we sort about getting ready for that inevitable turn in the commodity price. And we focused on 4 key areas. We focused on vision and strategy. We focused on foundation development, organic growth, and now M&A becomes a key focus for us. But the first thing to do is to make sure Honeymoon works properly, ramps up properly, and Alta Mesa as well, such that we can build confidence in our share price and operations to then garner support for future growth. Our vision was really to become Australia's next uranium producer, which we achieved. We wanted a 10-year mine life. We wanted 2.5 million pound per annum production. We wanted to get an exploration target of significance such that we could extend the mine life. We've achieved all of those. We wanted to achieve significant shareholder growth, which we've done over the past 7 to 8 years since joining the company. We've also re-established key working relationships with government, fuel buyers around the world, and sort of built that credibility of Honeymoon back onto the world scale, which is now bearing dividends. From foundation and development, we set about recruiting a board that's strong with uranium expertise, with the likes of Wyatt Buck, Bryn Jones, we've got Sashi Davies heading up marketing strategy. And more recently, we've really built out our management team now that we're sort of cash flow earning and positive, with the likes of Justin Laird, 10 years with Wesfarmers in business development as the CFO. Matt Ducey just joined us from IGO, where he was the COO and interim CEO. You've got the likes of Andy Wild, who was Paladin's chief geologist during the last cycle, and one of the most renowned uranium geologists in the world. So wonderful to start harnessing that team and looking at new potential and what more we can do actually on our own tenements as well. We looked at our chemistry, as shown. We proved up that we could do field leach trials, and we could prove up that we could get the right tenor of uranium from the wellfields, and that we could use ion exchange technology. And we set about that with self-performing. So rather than an EPCM type model, we ourselves recruited our own designers, engineers, we did our own procurement, contracting, we rebuilt Honeymoon from its foundation. So that's part of the strategy, that we wanted to harness a team because there's simply a lack of talent out there since the last cycle, as many, when the uranium price went into the doldrums, drifted off into other commodities and industries. So we've deliberately set about building our own owners team to take new projects forward. And then you look at the organic growth. So with that, we've got 2 satellite deposits, Jason's and Gould's Dam, that we're now looking to bring into production and put mining licenses around them. And that's one of Matt's key focuses. We also acquired other tenements within South Australia. And more broadly, we've looked around the world, focusing on tier 1 jurisdictions for more prospective tenements. We've also taken advantage of our base metal projects in such that we have a joint venture agreement with First Quantum, who are currently drilling for copper on our Honeymoon tenement. So that could be an exciting sort of side income. But mergers and acquisitions, look, we're not rushing into it, but we're keeping our eye open. We look at all the opportunities and we're just biding time to make sure that we find value accretive projects for our future. So when you look at the slides together, the two projects of Honeymoon and Alta Mesa, there we are, both in uranium-friendly jurisdictions, South Texas, South Australia. Both are in production, both shipments. We've both got ion exchange and in situ recovery. The synergies are very strong between the two companies, and we're sharing our IP technical know-how with one another. It's a wonderful partnership, and we're terribly excited to go to the opening of the mine, Alta Mesa, next week, and I'm pleased a lot of brokers, analysts from Australia and funds are joining us. So that's set to be quite exciting. Honeymoon's destined to produce 2.45 million pounds per annum nameplate, Alta Mesa, the 1.5 million pounds. With Alta Mesa's production, Boss Energy will get 30% unencumbered of that production. So call it 450,000 pounds per annum that we can sell into our own sales mix. In terms of shareholder returns, we've delivered on average up to last month an average of 42.6% TSR every year since 2017, 2016. So it's been a wonderful growth story. Really, we've had a very disciplined approach to our capital, as you saw with the self-performing model. Of the $443 that we've raised to date, Australian, we have currently, this was done at June, but now we've got about $245 million on our balance sheet. So we have an absolutely zero debt. So we've really maximised our balance sheet and tried to walk in tandem with the actual market, but it's been steadily, gradually walking through this process. And really, since we acquired Honeymoon in December 15, we've technically updated the project with in situ recovery, ion exchange. We've upgraded our JORC resource from 14 million to 72 million pounds. We've taken care of the permitting requirements. We've built those relationships. In March 21, we acquired 1.25 million pounds uranium, seeing that the market was going to change. So we purchased that at 30.15 US per pound. That's already shown 100 million in profit, which is basically what accounts for our strong balance sheet largely. March 22, we raised an additional 125 million for the capex to restart Honeymoon to advance that engineering procurement. And now we're looking to really ramp up our production. So the question then comes, why now? Why not wait? Why not wait to the 2030s or longer? Our view is that the market's likely to be tightest to 2030 until new mines, you've got the likes of NextGen and other big projects, come into the wings. So we wanted to utilise our restart advantage. We wanted to be there. And as mentioned, we really do believe that not all development projects are going to come in on time. And that's what's going to give rise to a price overshoot that we hope to sell into that market, generate cash and become a bigger player within the global market. And to date, I mean, we're seeing the strongest uranium fundamentals since 2000. So as Cameco keeps highlighting, this really is the highest price at the beginning of a cycle, and that's set to increase. So even though the spot market seems to have lost a bit of steam, it would appear, the term price is still strong. It's still at 80, 81 US per pound, and it's been that way for a number of months. So we really see this as one of the strongest starting points for any cycle. And as government's set to continue to pursue net zero carbon emissions and nuclear worldwide is really being supported by policy to grow, and where they're going to be there. So even before Russia invaded Ukraine, new supply was needed. And that invasion has simply highlighted geopolitical uncertainty, such that places as countries like Australia and the US in such strong jurisdictions to support the Western nuclear fleet. In terms of what we look to do, so we refer to Honeymoon as a restart project because it previously produced, it exported around the world. But what we set out to do were four key design areas. The water treatment plant, basically our groundwater is high in salinity. So think desalination plant. We remove the salt and the organics from the water such that you've got a potable water supply going through the ore body with your lixiviant to leach the uranium. So in terms of that, we grew that water treatment plant, the RO process, by a multitude of 10 to achieve that purpose. We then look at the production well fields. We've introduced new modern methods of wellfield technology such that we're able to leach more effectively, placing of screens, optimizing the speed of which we can actually leach that uranium. We then set about introducing ion exchange technology, which is an absolute game changer for Honeymoon. It's far more efficient, lower cost production, used throughout the world over the last 6 decades. For example, Langer Heinrich uses it, Husab uses it, the Inkai project with Cameco and Kazatomprom use that technology, so widely used throughout the world. No doubt the foundations were in place with Honeymoon. We get our power off the grid, we've got an airstrip, that groundwater reservoir is enormous. But really, we set about making fundamental changes. And the last change we did was introduce a new high temperature calciner such that we can produce U3O8 as a more enriched product that the conversion facilities around the world are seeking. So that was a real game changer for us. Walking through some of those changes, pictorially, here's the RO plant that we produce. So you can see that it's got sort of expansion. Those 40-foot containers house the actual RO plant. We then look at in situ recovery, which is the method by which we actually extract or mine our material. It's lower cost, it's more efficient. You do away with scouring the landscape or open pit. Effectively, barren leach solution is injected down to around 80 to 110 meters in depth, runs through the ore body, leaching the process through pore volumes, continually recirculated until you actually exhaust that ore body. From there, the pregnant leach solution is pumped to the surface, and from the surface, it's then taken above ground through the actual well fields to the start of the ion exchange process. So looking at that, here's a more recent picture of the initial well fields that will count for the first 2 to 3 years of production. You can see how they sit just adjacent to the Honeymoon mine. You can walk out there easily from the operating perspective. There's well fields 1 and 2 and 3, all connected, all ready to come online as we increase that step out in the column build. So running really well and very pleased to see that. But effectively, that's the impact it has on the ground surface, as you can see. So you don't have to have the yellow fleet, you don't have to have as many people, and that's what really gives ISR projects such a benefit in terms of lower cost operations. So looking back over the last 10 years with the commodity price and the doldrums, it was actually Kazakhstan that carried the bulk of production because worldwide, because of the lower cost, and Heathgate, our actual nearest producers to about 300 kilometres to our west, ISR projects. From there, the pregnant leach solution is taken to the PLS pond, and from there, the pond where all the actual grades are almost integrated mix, so you get a consistent grade. And from that, from the ponds, it's pumped into the ion exchange columns. This is an older photo, but there you can see the crane in the background taking care of some of the removal of the old solvent extraction process. There you go again, sort of removing that SX column, the previous columns, the previous front end of the plant. There we've also, part of that self-performing ethic, we purchased our own 400-ton crane that we'll resell, but at a profit, mind you. But again, another example of self-performing and looking after shareholder interests. Here's the first NIM6 solution columns that came to site, which was exciting. This was the only piece of equipment, these columns that were produced overseas. In terms of the calciner, the piping, the pumps, etc., everything else has been purchased within Australia. So very proud Australian company. From there, we did our first ion exchange column lift, and there you can see we've extracted the solvent extraction columns, now putting in ion exchange, such that we get to where we are now. So that picture there is the first 3 columns that have been installed. Going from left to right, you've got column 1, column 2, column 3. Column 1's been operating since April. That's now at nameplate capacity. And we're right now, this month, achieved our best month to date. So incrementally it's growing, but that's now ready to run at 400,000 pounds per annum. Column 2 is also now entering production, which is terrific. Column 3 is destined to come online in December this year. So they're the first 3 columns that will account for the first 2 years of production. running really well. Once the first column's in, the next columns are really cookie cutting. It's very simple to connect the remaining columns. Effectively, the first column was the trial. But we're also finding a high take-up or residency of the resin beads. They're really coping well with the resin in our environment. So yeah, from a chemistry perspective, it's just been a wonderful success story of a technical breakthrough from a previous operation restarting to achieve what we're getting now. The next 3 columns will be installed early next year, with columns 4 to 6 in the first 6 months. So it's really getting these first 3 columns. By doing column 1, 2, 3, 4, 5, 6, you really can incrementally ramp up your process. And as such, we're looking to announce commercial production with the December quarter when we have the necessary flow to sort of not disproportionate costs, and we can spread it out over what would be normal production. But as mentioned, the specific ramp-up profile exactly bodes with our feasibility study, and we're certainly on track to achieve just those targets. From there, we're now running ahead of feasibility study, really. We produced a further 72,000 pounds in the months of July and August. We're doing really well in September, and that's just set to grow as each column comes on. As mentioned, column 2 is now in production, commenced production. Column 3 is then destined to be ready for December, but if not sooner with its commissioning process. So drumming, shipping uranium, and now selling it and deriving an income. In fact, our first sales were made in July, and we've already banked that income. So yeah, Boss is going well in terms of Honeymoon, and also with Alta Mesa, which is set to do its first shipment. We've got a mining license covering 36 million pounds of our resource out of 72 million pounds. The remaining deposit sits on 2 satellite deposits, one called Jason's, one's called Gould's Dam. The rigs have just finished up at Gould's Dam, and then they're moving on to Jason's. The mineral resource study is about 80% complete on Gould's Dam, looking at the lithology and the mine plan around that. Once that's complete at the end of this year, we're applying for our mining license. We've got monitoring wells in, testing that groundwater or hydro testing the groundwater movement, which is now imperative or necessary for every uranium or mining operation in Australia. And then we're looking at Jason's, and the drilling will finish there at the end of this year. So largely infill drilling to start that process. It's then a question of whether we trunk or truck that material back to site. But what we're looking to do there is extend the life of mine or increase the annual production. In total, we've got about 6,000 square kilometres of tenements in South Australia. We've got some unexplored areas that do look prospective, but we do need to do a fair bit of work there to prove up. And going back, it does take time to bring new development projects online. So our idea, get Honeymoon up and running, prove that the production process works, ramp it up, get good cash flow. Really, in the meantime, look at some early stage projects, also consider some of the larger near-term development projects to see if they can further unlock value for shareholders. But in terms of the exploration efforts, as mentioned, we've got about Andy Wild has joined the team, one of Australia's most recognised and renowned exploration geologists for uranium. And under him, we've got about eight seasoned uranium geologists. So an expanding team that's very focused on that future growth and expansion of Honeymoon. In terms of Alta Mesa, it's a high-grade mine. They're looking to expand their resource. They've explored about 5% of their 200,000 square acre tenement block, their mining license area. But their drill results are fantastic. And not only that, as part of the joint venture agreement, there's a 5-mile cordon around that mining license, such that if we're able to negotiate successfully with neighbouring landholders that have uranium deposits, we'll be able to incorporate that into the joint venture of which Boss Energy will get 30% ownership of. So very exciting growth project. The plant's going really well. With Paul Goringson at the helm as CEO, he actually built the plant previously, and we look upon Paul and his team like Dennis Stover, Bill Goringson, Bill Sharif, as some of the best ISR ion exchange operatives in the US. They've been through several cycles and are very well recognised in that part of the region. So yeah, very, very pleased to be working with them. And the benefit of all that, of course, is that we're able to share IP and knowledge and market-related discussions. So just a wonderful partnership there in the making. That plant's due to produce 1.5 million pounds at nameplate per annum. It's got the capacity to go up to 2 million pounds. And as mentioned, our reward or our sort of dividend is in the form of getting offtake. So we get 30% of what's produced that we can sell into our own market. US production is in high demand. The US producers roughly account for about 5% of the US nuclear fleet demand, and that's where this is so beneficial, because there's just ready demand, and all that product is destined to stay in the US. So really pleased, and as mentioned, really excited to be there next week for its grand opening. When you look at the two projects itself, just looking at the board of directors, you've got Wyatt Buck, who was sort of the GM of Cameco's flagship mine, McArthur River. He was the GM building, seeing Langer Heinrich through its original commissioning to nameplate. He oversaw the building of Kalakira. It's a terrific chair. And together with Jan Honeymoon from First Quantum, very strong HR legal leaning. Bryn Jones has had a career in the industry too with Heathgate. It's a strong board that we're now looking to expand. Sashi Davies, who many of you know, still on the team and who I've had the pleasure of working with for the past 15 years. So who's terrific. And then that encore team, as mentioned, the likes of Paul Goringson, Dennis Stover, Bill Sharif, and their team. So very strong. And from the dots there, you can see the various projects we've worked on around the world. In terms of contracting activity, we've entered 2 contracts, signing the third imminently. We're looking to gradually contract. We're not in a rush to do so. We firmly believe the uranium price is going to lift. And we're just at the start of a cycle. So we've got a gradual ramp up. We've got a very strong balance sheet. We're not under the pressure of having to finance debt or the likes. We're cash flow positive as is. So it's a really good, strong position. And as mentioned, with that rise in uranium price, we'll look to do a combination of contracting and selling into the spot market through Sashi and the team. So we wanted to retain that flexibility as we go into the contracting cycle. Strong relationships. We're now constantly being asked. Off-market discussions continue, whether you enter into the RFP type process. And as mentioned at the start, really pleasing to see SMRs now reaching out, which is a really cool development, because when you think about it, if you're building an SMR or a nuclear power plant, say, it's up to a $3 to $5 billion project, surely then you have to look at your downward supply, your reagents or your uranium. Where's that going to come from? So really cool to see that sort of conversation starting. We will layer in our contracts into a rising market. We'll look to firmly focus on market-related contracts. A lot of the contracts at the moment more hybrid, market-related and a fixed price component. We're trying to just stick with market-related pricing just to keep that cap and collar, but layer it in. So as one contract rolls off, you enter into another contract of various tenures from 3 to 7 years, ideally. When we look at the final slide, and I know this has been discussed a lot today, but these are the 4 key areas that I see as a company when we look out at the cycle, why we believe it's so buoyant and set to rise. We believe that at the start of the cycle, it's never been stronger. It's not just the recent guidance from Kazakhstan, which has a marginal impact on supply, but nuclear power itself tends to be recession-proof. You can't simply turn nuclear power plants on and off. They continue to consume uranium and power, provide that baseload energy 24/7, and they're going to remain in high demand. And now what we're seeing are those new demand from data centers, concrete, steel manufacturers. So really very exciting period to be entering into. And with that, I look forward to sharing the journey with you as we go forward into this cycle and sharing further progress from Boss Energy and Encore Energy's Alta Mesa project. Thank you.
Thank you, Duncan. Congratulations for getting it to this point. It's been an incredible journey for you and the company over the last few years. And I think Boss Energy perhaps epitomises more than anyone just the disconnect that's going on this year between equity prices and the fundamentals of the industry. I think with your share price at around the $3 level, it's pretty similar to where it was 18 months ago when uranium was $50 a pound and Honeymoon wasn't even in production. So, for those who missed that early run in Boss, these sort of prices are absolutely really, really good value. So agree with all the comments you've made. Really encouraging to see the progress you've made at Honeymoon, and look forward to seeing those next columns go in and the ramp up proceed, and what you can do also with your Alta Mesa assets. So thank you for joining us, Duncan. Really good, and we will watch your progress with interest. Thank you.
Perfect. Thanks very much, Andrew. Thank you.